Ladies and gentlemen, I'd like to welcome all of the shareholders, analysts, journalists to our press conference, during which we'll sum up our results, financial results, transport results for 2020. And so the main parameter of our operations is turnover volume and the work we've done, the revenue, the EBITDA result or the net result were worse than the performance we had in 2019. In just a few minutes during the presentation, I'll give you the specific numbers. The impact on the results of our group was, well, we had an impact by the economic situation that took place as a result of the COVID-19 pandemic. And so economies were working under the lockdown, which was the most stringent in Q2 of last year. This lockdown meant that there was less industrial production, and as a result, we had less trading, and that made a direct impact and contributed to a major decrease in transportation services, because this is correlated directly with economic conditions. According to the Central Statistics Office, in 2020, the Polish economy recorded a GDP shrinkage of 2.7 percentage points, while in 2019 we could brag about economic expansion growth of 4.5%. So various sectors, of course, suffered the first recession seen since the 90s of the previous century. So in the rail sector, we can say that the decline was twice as high as opposed to the GDP shrinkage, and this is something that was very noticeable by freight handlers like PKP Cargo, which are dealing with bulk commodities. In the second half of the year, we had a much better period, and in Q4, the amount of transport was quite similar to Q4 2019. So less mass commodity, bulk commodity transport like metal ores and coal and aggregates were filled in by intermodal transport. So there is much more interest in transport along the new Silk Road. And in the second half of the year, especially in Q4, we saw a gradual revisitation of the levels from prior to the pandemic. So the PKP Cargo group did not just passively look at the economic conditions. We tried to react and to mitigate losses. We made savings efforts and optimization efforts. We were able to obtain financial support from the government under the anti-crisis shield. We took efforts to ensure that the quality of our services was augmented, and we expanded our service product offering. Some of the examples could be the fact that we developed the operator trains under PKP Cargo, where we have the Connect operator entity doing that business. So in 2021, we can say that the year got started off pretty good, pretty decently. We can say that such a difficult period like the one we had last year is something that will not be repeated. That's our hope. And now I'd like to go on to a more detailed discussion of the results and the situation in 2020 through the presentation that I would like to discuss, and it's on our website. So I would invite anybody who wants to follow the slides, go ahead and open the presentation, and I'll begin delivering that presentation. So in terms of the major summary, the wrap-up of the events and the figures in 2020, this is on slide number 3. So I would like to say that we generated revenue of 4 billion zlotys. Despite the demanding situation on the market, the challenging situation, the EBITDA was 580 million zlotys, and the operation loss was 186 million zlotys. With the co-funding for employee salaries, under the Guaranteed Employee Benefits Fund was a little bit more than 115 million zlotys. We transported 93.6 million tons of freight volume, and so we had 26.3 billion TKMs, and we were developing our intermodal transport according to the strategy we embraced in 2018. And as I mentioned at the outset, this is something that enabled us to offset to a large degree the losses or the shortfall in bulk commodity transport in 2020. And so we began to modernize and develop our port in Małaszewice. We launched interoperated trains based on the major contracts that we signed last year. We're talking here about coal supply contracts for PGNiG and Enea, as well as the contract with ArcelorMittal for an amount in excess of around 1 billion zlotys. And then we also had a contract signed with the National Sugar Company. So having in mind the situation we were dealing with, I'd like to say a few words about the market position, market situation, circumstances, and the competitive landscape. And this is something that took place in a period in which there was less demand. And so on slide 4, I'd like to refer to the situation in terms of market share. Generally speaking, the freight market, rail freight market, shrank by nearly 7%, as I mentioned in my prefatory remarks. And it can be broken down into 3 major market segments. So if we look at the other industrial groups and other freight operators, so the diversification or the split of the market is justified because, in part, this market is a limited market. I'm talking about transport for large industrial groups. So in 2020, these groups, because of the shrinkage in the market, saw their increase in the market share, even though there was less freight volume. And so if you look at some of the large transportation entities that were delivering these services to the, like Lotos Collect or Orlen Coltrans, or the Copra Group, which was working for Orlen, Lotos, and Metal. So last year, their market share increased by 1.7%. In the other groups, we can see the greatest growth by very small entities where their market shares were under 0.4%, but because of the market situation, they were able to deliver individual freight services for individual bits of cargo, and so they saw their market share increase to 1.8%. What I'm talking about shows you a bit about the mix of the market, because in 2020, we can say that the biggest negative impact on the freight volume, on the freight market, was amongst entities delivering mass or bulk commodities. So our market share shrank by 3.2%, so 7% year on year. Well, we can say that it was smaller than amongst the major competitors. For example, the big cargo, where they saw a decline of more than 11%. So this situation affected adversely our competitors. It affected us and the large industrial groups to a lesser extent. So for the internal needs, of these large transport entities. So this is a broader discussion of the market situation because it had an impact on the overall marketplace. This was on slide 4. On slide 5, we also see a sum up which entities and where saw increases, and this also shows you where we are, so I won't refer to this directly. On the next slide, if we go back or go on to our own situation and characterizing the major commodity classes on slide 6, where we see the breakdown with solid fuels and the main determinants of our situation in the various segments, what the drivers were of our overall situation. So if we look at the first group, which is solid fuel, well, the major factor driving demand was the decline in demand for coke and coking coal in terms of those industries that consume steel. We also saw a decline in the consumption of electricity in 2020. And here I think it's worth mentioning in particular Q2. So in the spring period, where the generation of electricity fell by some 20%, so roughly 1/5 of generation of electricity was the shrinkage. So on a full year basis, the step back was around 12%, and that meant there was less demand for solid fuel because there was much less demand for the consumption of coal and solid fuels. As many production plants were shut down, including mines, and so this led to a cool down and lesser demand for the transport of solid fuel. We also see changes in the energy mix. So coal accounts for a lesser percentage of the energy mix. So if we look at aggregates, we could see that new infrastructural construction plans were suspended. Fewer investments were executed where there was bigger demand, as I mentioned previously. So smaller companies were expanding their rolling stock. So we saw that some of the smaller companies increasing their market share from 4.5% to more than 6% as a result of the efforts taken by various producers, especially amongst aggregates. So we saw single connections being set up by those players. And so the demand on this market was lesser for other operators. If we look at intermodal transportation, we've observed larger share of containers as opposed to conventional transport. And of course, the overall international trade was down because of the pandemic, so the growth was less vibrant. We also saw improvement amongst in rail transport compared to vehicle transport. So we saw that coal transport was very reliable, and so the execution of rail freight was not suspended. And this is one of the things that tells us that it was one of the safest modes of transport during this difficult period. So if we look at metals and ores, in 2020, we can say that some of the decisions made impact. For example, the decisions made by the management board of Mittal to shut down a blast furnace. And so there was less demand for steel products, and so less scrap transport. And that led to a slowdown in the overall industry, especially in the motor industry, automobile industry, machining industry, so in plants producing cars. So for several months across Europe, these companies shut their plants down and suspended production. And this was one of the outcomes of the less demand for steel in this period. So that is a bit of a characterization of the various commodity groups or classes. So on slide 7, I'd like to talk about some of the efforts we undertook to offset the depressed demand in accordance with the strategy we've been following since 2018 as we move from bulk commodity transport. So PKP Cargo is changing from a rail cargo freight operator for heavy industry to a logistics operator. So in 2020, we were successful as to increase in terms of freight volume and millions of tons. We were able to transport 9.7 million tons in 2016. We had 6.5 million tons. So the CAGR on that was roughly 10.7% over that period. And this growth offset some of the decreased demand in terms of coal transportation. So this fell from 53.7 million tons in 2016 to 42.5, million tons in 2020. So in 2019, it was 47.9. So we can say that these phenomena drove our operations and talked about our abilities to transport commodities. So in terms of our sales efforts, we were more intensive. We extended our offering of services to include more intermodal transport. So in June, and insofar as I require, we have the product operator trains under the brand name of Connect Operator. We signed contracts to set up a company, an intermodal company with the Lithuanian partners, LT Cargo. So we've signed a contract with the National Sugar Company to haul sugar in containers. This is a 10-year contract, a stable, long-term contract. We've signed a contract with ArcelorMittal, which is a long-term contract. This is very important to stabilize our operations. We've invested in terminal infrastructure, especially in Małaszewice, where the transportation along the New Silk Road in 2020 saw pretty rapid growth. So 550 EU was transported compared to 330. So this is growth of more than 65%. So the freight volume was substantially higher than in 2019. So basically laying tracks and increasing our transshipment capabilities. So the terminals that we have as PKP Cargo, all of this, it means that we've become more active. We have more terminal accessibility, and we're involved in the construction of a terminal in Katowice and the planned activities to do something similar in Gniewczyn. We've also pursued our strategy, rapid strategy in terms of intelligent or smart mobility, sustainability, to invest in modern rolling stock. So intermodal platforms, which are needed, flat train cars, wagons, which are needed to increase our capacity and our importance in the region. We have also traction wagons utilizing renewable energy sources, so digital automatic coupling. So we're continuing the program in terms of the acoustic monitoring, modernization of our wagons, also smart electric locomotives and the utilization of fuel. So we're implementing modern solutions in IT to manage the the logistics process in the company. So in terms of our sales activities, we were matching our headcount in the PKP core group. Since we had less demand for our services, we had to be active in terms of adapting our structures, the fixed costs, to our ability to deliver transport services. And so in 2020, we were able to bring about and find some equilibrium, reduce the headcount across the group by 7.7%, by 1,805 persons. In PKP Cargo, we had a reduction of 1,309 persons. So this was exactly 8% less. So when we look at the averages of headcount, we can say that they're down by 1,108 persons in PKP Cargo. But since the attrition rate was higher in the second half of the year, so what we had at the end of the year was 8% down from the previous year in terms of headcount. So in Q4, let me remind you, we had transport volume that was at the same level as in 2019. So we've started 2021 with a much lighter structure. And so the transport that we're delivering nowadays, I hope, will now show an upward trend, and this should continue into Q1 2021. And we'll see this later in terms of our costs and how they will rebound and what their positive impact will be on our results. Here I have a short presentation of our freight volumes on slide 9. We can see the volume in 2020, where we had 93.6 million tons of cargo, so 9.6% down from the previous year. So we have presented the main factors, contributing factors. If we look at freight operations, it was down 12% from the year before. But here, I think it's noteworthy and worth emphasizing, as I mentioned previously, that we as a group, intermodal transportation grew in terms of what we've done, because the freight volume was 0.2 billion kilometers was bigger. And so this was more than 18% of our activity. So it was 0.3 percentage points the year before. And so we can see the dynamics, the growth rate, and the conversion here was visible in terms of our transport volumes in 2018, 2019, 2019 and 2020. So on the next slide, just as I summed up at the beginning of today's session, despite the challenging situation on the marketplace caused by the pandemic, we can say that this issue drove the amount of freight operations, and so our revenue of 4 billion was down by some 14% from the previous year. Having in mind the major percentage of fixed costs, and so from the outside of the pandemic, we've also seen the profitability coming down. So EBITDA is 590 million, and so it's down by some 30% from what we saw in 2019. Here, I think it would be noteworthy to discuss this at greater detail, especially if we look at the subsequent slide, what the consequences and the effects of our savings efforts, which we undertook in 2020. and how that translated into our EBITDA result. So if you look at revenue of contracts was down by 706 million zlotys. The only line item that was larger was depreciation. This was as a result of investments that we made in 2019, but all of the other variable costs were lower. What we should emphasize here is the reduction in the fixed costs. So they're down by nearly 6% if we look at employee benefits. So the costs were down by nearly 100 million zlotys. So our determination to continue following savings is complete. This is something we'll continue to follow to make sure that we have the ability to generate profits on our business operations. So if we look at unit prices on slide 15, we can see that the unit prices were down by roughly 3%, but the price erosion was not substantial, despite the fact that the market was furiously competitive. So if we look at fixed expenses, depreciation, and employee benefits. So if you look at other variable expenses, they were down. So this was around 1%, so below inflation. So the variable expenses, as they were aligned to the amount of freight volume, they were lower than inflation. So the unit costs of employee benefits and depreciation will fall as a result of aligning fixed expenses to the quantity of freight volume we carry. Of course, freight volume is the most important thing that we look at in terms of 2020, because this is not something that happened as a process that took place over a large number of months, but because of the economic crisis, we can say that this is something that transpired at one point in time and quite rapidly. So it was very difficult within a week to align fixed costs to our capacity in terms of realizing freight volume. On page 16, we have a short piece of information to wrap up this presentation, go on to the Q&A session as rapidly as possible. I think what we could say here is we compare this with the crisis situation in the Polish economy, the European economy, the global economy. We had a stable balance sheet and stable sources of funding. So the total debt in 2020 fell by 150 million zlotys, because at the end of 2020 we had 4.16 billion, and previously it was 4.5 billion. So we can say that the general debt level was more or less at the same level in 2020 and 2021. And so we had available funding sources of 566 million zlotys, where the bulk of this funding was cash, because this was 306 million in cash and cash equivalents. If we look at the prospects, this is something that's very important. So we should see and take a look at those prospects this year. And some of the major factors contributing to the development of the rail sector in subsequent years. Of course, we have the decarbonization of the economy, reducing noise, and the sustainable strategy for transportation, Pinto 2030, and European initiatives and Polish initiatives in terms of using rail transport to ensure that the road infrastructure can be improved. And then, so in the document, it's written that the ambition of all of the governments of the EU member states is to have a 30%, have rail transport account for 30% of the mix by 2030. So if you look at our port, or Gdańsk port, where investments in the rail infrastructure, this is something that should complete be completed this year, and this will augment our abilities to transport more along the rail lines. And this is something that's happening on the new Silk Road as well. And this is something that took place in 2020. I hope it will continue in 2021 as we grow the amount of transport, and then we'll have ongoing continuization, enlarging investments, rail investments in the terminals, especially intermodal terminals. And so the prospects in 2021 in terms of our market context, all of this is put forward on slide 19. And this would give you a little bit more information on what I've just mentioned to you a few moments ago. And so I would dwell a little bit on slide 20, where we can think about the new product, Interconnect operator. So this is a novel product in terms of interoperator trains across Europe. We started this in June 2019 in terms of this operator. So we have international routes from Maszowice to Maczpenza and to Duisburg. We have plans for new connections between Poznań and Hamburg and Duisburg, and Gliwice, Budapest, and Gliwice, Trieste, to Istanbul, to Medyka, Kiev, and then to Dnipro, and then also Gdynia to Gliwice. So we can say this is going to be part of the logistics offering. We want to continue expanding that, and we're really betting on intermodal transportation. And then one of the final slides, in fact, it's the final slide that I'd like to draw your attention to, and I'd like to dwell on it, is the increase or the transition of our subsidiary PKP Cargo International into an intermodal operator, where we, or the group PKP Cargo, this is the direction we're heading. And as we started in 2020, despite the fact that it was a rather difficult situation on the marketplace, basically the freight operations fell here by only 0.4% year on year, making the comparison. But if we look at the individual products, we can see how much growth there was in intermodal transport and the overall mix. It moved up from 32 to 37%, while coal fell from 35 to 28 in 2020. We can say that the company had intermodal transport in the mix compared to other modes of transport. So if we, especially if we think about solid fuels, so 4 years ago, coal transport had a dominant position. So we can say that we've completed this transformation, product transformation successfully. So PKP Cargo, PKP International, has expanded its container-based transportation into Southern Europe, Paskov, Kope, and so Korwina, Kopa. And so this is linked to an acquisition we made in 2018. So in terms of the company we acquired in Slovenia to reach Adriatic Sea and intensify our operations in Southern Europe. And so we were able to do more in the product transformation, and this was supported by our mindset to streamline the operations of the company. That's more or less it from my side in terms of the main avenues of the changes that we've achieved in 2020, where they've made a positive contribution to where we are in 2021. I'd like to thank you for your attention, and now we can go on to the next portion of our meeting, which would be the Q&A session. So we've received a number of questions, so I would encourage you to pose your questions through the platform. So the first question that has been posed by multiple entities. This year, does PKP Cargo, having in mind the results for last year, anticipate that cost will be reduced by selling down some of its assets or reducing headcount? As I mentioned during the presentation, we're determined as a management team to follow a savings policy. Today, If we look at the headcount structure, so headcount is down by 8% from the previous year. And as I mentioned, the freight volume is back at the level we had prior to the pandemic. So if that trend, the positive trend we see in the market is continued, then we should think that this will not be necessary, but we will continue to streamline the organization. We want to reduce costs. We want to stay within the cost regime, but we'll talk about a variety of scenarios depending on what's going to happen on the market overall in terms of the schedule of supplies in spring and some of the forecasts that we see for bulk commodities, as well as the overall economic conditions. It seems that at this point in time, all of this is relatively stable. So if no challenges are in place in terms of the volume of freight, then we can say that we can just try to polish some things up in terms of or basically clean up some areas or to fine-tune the dimensions, but we don't see major needs in this area because the freight volumes are rising, and so the utilization and the employee productivity has to be higher, and we're working on that employee productivity. So this is part of an ongoing process to get better, and this is underway. There's also a question, since freight volume fell substantially, the question that continues to come forward: what does the company believe? What is the level of transport is needed for the company to generate a positive result? Of course, as I've mentioned, this year seems to be a year of stabilization in terms of the overall economic situation, and what we've seen in Q4 and what we see today in terms of the number of freight transports. We can say that the Q2 2020 desperate situation with the close down of the economy, the lockdown, is not something that will be repeated. So fixed costs have been reduced, especially if we look at employee benefits. So we should say that the quantity of cargo we should pursue with the reduced cost base and higher productivity. Well, basically that quantum is lower. So we hope that we'll be able to achieve equilibrium this year and then generate a positive result, ensuring that we're going to be able to continue those trends, especially on the mass products and bulk products. And of course, as we see the growth in intermodal transport, then we have Capex as a question. What sort of Capex spend do you anticipate in 2021? And we have more detailed questions about your capital expenditures for terminals. We have a specific question about Małaszewice and the other two terminals in Karasznice and Geniusze. If we look at the quantum of Capex we want to follow, as I mentioned at the previous conference, in terms of our ability to generate positive cash flow or a positive EBITDA, this is a pillar upon which we want to run our operations. We want our Capex spend to be below 1 times the EBITDA we generate. So in 2020, we operated to make sure that those two figures are aligned. So we've considerably improved year on year this ratio, because it was 1.6 in 2019. It was around 1.3 in 2020. And so we hope this year that it'll be below 1 times in 2021. And so This is the anchor we have put in place in terms of the ratios we'd like to achieve. If we look at the terminal investments in Malszewice, this is an investment that we're doing under the co-funding program from the EU. So the PKP cargo terminals, I think it's around 17 million, if I remember correctly. If I need to check that figure specifically, then I'll do that. But this is being co-funded by the EU. If we look at the ongoing development of terminals and funding them and the Capex that will incur, all of this is determined by the ability to source funding from the EU under the KPO and other or RPO programs. Because one of the programs we want to do under an RPO program and future EU funds. So these figures, these amounts, we would like to cover to the greatest extent possible by public funds that are available to everybody, to ours. We want them to account for more than 50% of the Capex. As we look at individual terminals, we'll issue press releases. I don't want to get ahead of myself in terms of the quantum of investments, and Katowice and Geniusza will certainly apply EU funds, and then we'll present those figures to you, ladies and gentlemen. But we think there's good opportunities to have co-funding for purchasing these flat wagons for intermodal transportation, and where this co-funding is provided by the EU and by ourselves, of course, and that will invest in the enlargement or the construction of new terminals. This will be driven by the ability to source funding from the EU. Another question is about our prices. What does the company anticipate as it looks at prices? Will prices slump, or will they be maintained at the same level? Do you intend to compete by price, having in mind the heightened competition on the market? Well, this is a very broad question. The unit prices that we gave you for last year are lower. As we can see, the price erosion is not major. The market is a competitive market, and one of the parameters that frequently appears in tenders in which we participate, well, price is one of those factors. But if we look at intermodal and container transport, well, price is one of three criteria for selection. So it's price, location, and time. So frequently, prices or offers are highly customized or individualized. And here we're competing in terms of quality. And it's this segment, this portion, doesn't have a clear denominator, that the price overall determines the ability to deliver those services, having in mind the competitive marketplace. Of course, as we see the market situation today and the dampened demand for freight transport year on year, one of the things that companies compete on is based on price, but price is not the only thing, because magnitude or scale, place, location, safety, security, and a large number of other parameters. And certainly today, if we look at bulk commodities, there's no real climate to increase these prices. That's one thing. But if we look at the freight volume that the market might like to acquire, again here, the price erosion will not be so noticeable. That's what I think. If we look at the infrastructural investments and the needs that we'll have, so solid fuel transportation will continue to be needed, and of course we'll compete here. And price is one of the factors that will be used, but that's not the only factor. Of course, we're scrutinizing this and we're trying to align our costs to that structure to ensure that we have a margin for error or discussion in our price-related discussions. We also have questions about the financing and the financial results in 2021. Having in mind the COVID-related shields, does the company anticipate sourcing money from these type of funds? And what about the financial result in 21 in terms of generating a positive result? Well, thank you very much for that question. If we look at the economic crisis related to the lockdown, well, this had a variety of waves and affected us in different ways. We're now in the process of the third wave of the pandemic. We're moving through the third wave. But the most critical thing to us and the most unfavorable thing to us in terms of a consequence of the pandemic, this was the first wave when the economies were closed down, production plants were closed in the spring of last year. And as I mentioned, the demand for energy, transportation of coal, closure of plants, including mines, all of these things exerted a major impact on freight demand. And so that's why we applied for and received support from the Polish government in the field, in the form of this anti-crisis shield today, and also in the fall of last year during the second wave. And today, we can say that we don't notice the negative or impacts, or we feel those negative impacts to a lesser extent. In Q4, as I mentioned, the freight volume was similar to the level from prior to the pandemic. Q1 of this year also suggests that we should not see continued downfall compared to what we saw in 2020. And so applying for or asking for money from the shield would not be justified from a freight volume point of view. Of course, the situation is dynamic. We're in the midst of the third wave of the pandemic at present. So the infrastructural needs, the mass needs are much better than what we saw a year ago. Of course, we'll continue observing this, and so depending on what's going to happen, we'll react flexibly. It's difficult to say precisely several weeks in advance what precisely will happen. And so all of the savings efforts and cost savings efforts have been undertaken to ensure that the company regains its ability to be profitable at all levels of the accounts. We also have a question about the law on train drivers. Will this law affect the structure of headcount in the company? Will it have a positive or a negative impact? If we look at the law on the work of train drivers, it hasn't been enacted yet, so I would not like to speculate about bills that have not yet been enacted. We have a team and a negotiation team that's involved in some discussions, so if this law is enacted, then we'll be able to react to it in detail. Right now, it's in the process of going through the legislative process for many, many years. So the company had informed about the probable cooperation with the Polish oil and gas company about transporting gas. The question is whether or not the company anticipates that this segment of gas transportation will be expanded. Well, we imagine that transportation of unique or niche products will grow. So we're also talking about specialized transport. So if you talk about LNG transportation, this is a specialized type of transportation. You have to have a special type of rolling stock. You have to have ISO containers, which are required to actually transport this fuel. talks have been held with the Polish oil and gas company about transporting LNG gas from the port in Świnoujście to southern Poland, having in mind the magnitude of this transport. Because on one hand, this was unit transport, so the scale of this transport did not guarantee both parties to a profitable and economically viable form of transportation. That's why some infrastructure had to be added in the Świnoujście port in order to be able to do transshipment from of ISO containers from the terminal directly onto the tracks. So as ISO containers are loaded, but if the client's needs, so I mean Polish oil and gas companies' needs, grow, just as we have a project in terms of hauling sugar for the Polish sugar company, we signed a contract with that entity. So this is not something that's been done in the past in terms of hauling sugar in containers. So if we look at LNG gas, so as the needs of the customer grow, then we'll be able to meet that demand. So here, I think for now, we've responded to many questions. If somebody hasn't received a response to a question that's been posed, well, we have the Investor Relations Department that's responsible for fielding your questions, and it will respond to all of your emails, and we'll send responses to those questions. At the end of this session, I'd like to thank you for your participation, but having in mind the current period where it's now Good Thursday, Easter is drawing near quickly, so I'd like to wish all of you health and joy and calmness and recreation, so relaxation during this period of hope coming from the Easter holidays. And I'd like to wish this to you and to your relatives, and I'll look forward to see you in good health at the next earnings conference. Thank you.